Today, we finish our discussion of the statement, sometimes the best thing you can do for your family is say no to you. Use the hashtag PastorsJDO3 or JDO3 podcast to join the discussion. And now, to the podcast.
But when you look at the fact that you may get a life insurance policy that would pay out your family $1 million, and that may cost you $150 a month, then you look at that business and say, you know what, it would be great to be able to pass this along, but right now it would be more responsible for me to take out this policy and to invest in this policy that's going to guarantee that my family receives X amount of dollars at the extinction of my life or at the losing of my life, than it will passing them on a business that maybe fails, or that maybe survives but only gives them $20,000 at maximum every year, right? And you may decide, even though it has been your dream and your lifetime desire to own certain enterprises, that right now for your family, it's best that you put dreams, desires, and ego aside and to do the thing that is responsible, because that's what being a good steward is, people. And being a good steward does not mean that you get to buy or to do everything that you want to do. Sometimes the best thing that you can do for your family is say no to you. And so I want to encourage you to look at your position and to then determine from the position that you're in whether it is the responsible thing to do to actually build out what you have intended to do. It might be something that actually sets your family back further because of your lack of foresight, right? And lack of insight. So he says, look, you can capitalize on the benefit of insurance because there are some hidden benefits to insurance that are often not looked at. Sometimes he says, look, we just look at how much is it going to cost a month and how much will my family get? And he said, look, there are some other things and other reasons some of our other counterparts buy these life insurance policies, right? And one of the things that he lifts up first is life insurance dividends, right? So there are some policies that come with life insurance dividends, right? So for those of you who are in the stock market, you know, it's a great thing. Some of your accounts may have dividends that come along with it. So you make a purchase, and along with benefiting from that stock price, when there is an overage, and this stock will pay you back off some dividends. And may not be phrasing that right, but one of mine does the same thing. And it's not always a lot of money. It may be $2, it may be $3, it may be $4, but it's something that you didn't have, right? And then you can take that and roll that right back in, cash it, and put it right back in and say, oh, let it roll. Let's go invest it in something else, right? And let's start something new, or let's take this dividend money and not put it back into our bank account to spend on some things, but let's take this money from these dividends, let's make it liquid, and let's take it and invest in something that we do think has potential, but we just didn't want to take a risk on because it was maybe not as moderate as we wanted it to be, and we wanted to do something that's a little aggressive. So now you can take that dividend money, you can turn it right back around and take a risk with the dividend money, and maybe you end up coming out on the back end with something greater, right? So the next thing he says is, look, you have investment guarantees, and there are some tax advantages. So I'm going to read off these tax advantages so that you'll have these documented. And if you can, get the book. Support the brother. I'm going to tell you, I'm glad that Thrivent had him on one of their streams. His book has been very, very resourceful, very enlightening, and then also very challenging as well. Because you have to look at yourself. It's going to make you ask some questions of yourself. And sometimes it's not a pretty picture, but you do want to ask these questions. So tax advantages. It says, look, whole life insurances, this is A under the investment guarantees. You have some guarantees, and then you have some tax advantages. It says, look, whole life insurance policies provide a guaranteed death benefit so that beneficiaries will not receive less than the amount on the life insurance policy. And so that means If the policy says, if it's a whole life policy, he says if that policy says it's $1 million, guess what? It's $1 million, and it's not a taxed $1 million. So you say, oh, you're gonna get $1 million, and they get back 600,000. He says, no. If it says that it's $1 million, your family will get $1 million. And so that's something that you want to keep in mind. The whole life policy premiums are guaranteed never to increase regardless of your health, the economy, or your age. That's something that you should consider. Remember, we talked about that, not last week, the week before last. We had issues last week. But he talked about this. Look, no matter what happens to your health, the premium stays the same. And that's why he wants us to make sure that we get this life insurance policy as young as you possibly can. Because if you get it right now while you're 24, 22, 21, 25, whatever it is coming out the gate, invest in their 401k, go down, get the life insurance policy. I know you ain't got any kids. You're like, I don't have any kids. Why should I get the policy? Get the policy. Because when you have kids and when you have this estate that you have to take care of, you will have $1 million policy for the rest of your life that you're paying $35 on. So you want to get that policy as soon as you can because it will not increase in its monthly premiums. And that's why he suggested specifically that we go after this whole life policy. Then he says, look, the cash value within your whole life policy is guaranteed to grow. So we're not looking at the market. This policy will accumulate, right? You're putting money in every month. The cash value is accumulating every month, so you can guarantee that there is cash there if the worst comes to worst. All right. The death benefit income from the whole life is tax-free. I said that earlier. For your beneficiaries, like I said, there's not going to be taxes that are taken out of this whole life policy. So you want to do that because that's going to give them the biggest bang for their buck. You just got to make sure that you are a good steward in passing on the wisdom of what to do with the money, because this money don't need to be invested in some other brand. It needs to be invested in the brand of your family legacy. All right, so you want to make sure that your children and your spouse know what to do with the money when they get it. Amen. The cash value from your whole life policy will grow tax deferred. And so that means the entire time there's no taxes taken out of it, right? Meaning that you will not pay income taxes on it, allowing it to grow even faster. Come on, think about how much of a blessing that is, right? You're not having to pay taxes this entire time that you're investing this money, so that when your family gets that, they're getting the bulk of what you invested in this policy, and it's going to be a blessing to them. Number F, letter F rather. The cash value from your whole life policy is yours to use during your lifetime, and you can usually access it income tax free. So if push comes to push with this whole life policy and you need to take some out of it, much like we do with our 401k, there's no taxes that are going to be added to this. And so it is something that becomes a liquid at your need and your discretion. And it is something that you can use to help you to be able to navigate things strategically with your family. Come on now. So I'm hoping that's some good information for you to be able to look at. And then he says, look, it's semi-compulsory savings. Now look, part of your whole life premium payment is applied to the cost of the insurance policy, and another portion is held in savings. That's that accumulation that he's talking about. It automatically accumulates things. Some of us have a challenge with saving, and even though you're saving, some of us have our savings account at our bank is not going to save at the same rate, and then also as a life insurance policy, because you understand the larger picture of it, you're more likely to be more disciplined and diligent with putting money into that, to paying that life insurance premium every month. Whereas with the savings account, you may do 25 this month, you may be doing 50 the next month, and then you may mix 3 or 4 months, right, where you don't pay money into that savings. So he says, look, just look at this as a savings account. You put that money in there. Most of us put the money in the savings account and just act like it's not there. You get it taken directly out of your check, bump directly out of your account. It goes over there. When you look at your balance, you know literally that money's been taken out of there, but to you it don't exist because it's there for emergency purposes. So he says, look, you can look at it as the same exact process, but it's a savings account with a larger impact, because at the end, even though you may save only $20,000 in your lifespan, if this policy is valued at $1 million, you save $20,000, which now becomes $1 million. Can the church say amen? All right. So he says, look, you're literally, the next tab that he says is you're literally creating your own bank. Remember, that's what we talked about earlier. You're able to take out a loan from yourself and pay back yourself, right? So literally, you can use this as a way to protect your line, and also you can use it as a way to protect the next line. One of the tips that I've been trying to implore to put into practice in my life is something that I got from one of my good friends, and he talked about how his in-laws helped to position his family for success. And what they did is they were at retirement age. They had accumulated a lot of money, but they had also been good stewards and paid off their debts. So what they had coming back in their investments was going to be more than enough to be able to take care of their monthly needs. So when their child got married, what they did is they took out a loan or took out some money from their life insurance policy or from their savings account. I don't know where they took the money from, but I ain't asked all that. It wasn't my business. But they took out that money, they gave it to them to buy their first starter home. They put that money on the starter home, and then they paid the in-laws back at I think it was like 1 or 2% interest, which meant that they had one of the lowest mortgage payments just known to mankind, right? So they used that money to position the next generation for success, right? Now, of course, they paid back all of that money. Hooray for them, because they're good stewards over their money. And if it's done for you, you should do the same thing. But it was a blessing to the next generation because they were able to not have it being paid back even at 5% interest, or right now at 4.3% interest. They were paying back at 1 or 2% interest. Now, one of the great things also about loaning that money to them, first of all, they didn't need the money because they had been good stewards over what they had, A. Then B, he talked about, my friend talked about a time where he had lost his job. He was in between jobs. He said he was able to call parents and say, hey guys, I lost my job. And I'm looking for another job. And what they did, they say, all right, stop the payments, roll the payments that you missed to the back end of this loan, and then you resume as soon as you get your job. Day one, we want our money, right? And they were able to resume payments. And so when they were in between jobs, they weren't concerned about getting kicked out of their house. They just paid their monthly bills, right? And they were able to look for a job without having the stress of being kicked out out of their home, right? And so these are some of the things that you can do, party people, if you will look and change your mindset on certain things that we have access to now, but don't always properly utilize. Now, I'm not saying that this is the way that you have to do it, but what I am saying is let's take the wisdom, because it is a way that you might want to do it. I'm not saying you gotta do it, but I'm saying it might be something that you want to do because it will go well, not just with you, but it'll go well with those who follow you. Don't you want to be called on to glory? Not just to go to meet Jesus, come on now, because we all looking forward to it, but at the same token, to know that you have the peace of mind that something has been left behind to take care of your family. Now, I want to impress that upon you. You need to do this at some level. I don't know how you're going to do it, but I'm saying you need to make sure your family's taken care of, brother. You need to make sure your family's taken care of, sister. And if that means that you got to deny yourself, you got to cut some things off, you got to sell some things, you got to reposition yourself, handle your business because it's what God would have you to do.
Thank you for joining us for the final part of Closing the Racial Wealth Gap, a discussion of the book from Eugene Mitchell. This book is a great read. Once you get the book, email me at pastorjohnny@firstmet.org. I would love to hear from you. Use the hashtag PastorJDO3 or JDO3 podcast to join this discussion.